With the fourth Bitcoin halving rapidly approaching, I wanted to do a video on mining dynamics. We're going to look at how Bitcoin mining has changed since the last halving, how it might change for this current one, and then we'll examine some of the dynamics happening in the industry and ask the question, are these dynamics leading to a more decentralized or less decentralized future for Bitcoin mining? Let's jump in. This video is made possible by Bitcoin trading cards, and I am pumped to have them as the first sponsor on my channel. I met Aladdin and the team back at Pacific Bitcoin 2022, and I'm not gonna lie, at the time I thought, okay, cool, a quirky little Bitcoin project, but little could I have imagined at the time how this project would capture imaginations. I've personally used these to orange pill people that I care about in my life. The art is stunning and features Bitcoin artists all around the world. You get high quality Bitcoin education on topics like economics and freedom as part of that, which makes this, as you can imagine, a really special project for me. And I'm not gonna lie, it makes you want to collect these. The community behind this is also truly insane. And I think they have a real shot at bringing Bitcoin to the mainstream. So if you're curious to check them out, head over to btc-tc.com where you can find the different series they've launched. And hey, if you do end up snagging some cards, you'll also get some Bitcoin rewards back on your purchase, powered by Jolts. Here's to ripping packs and stacking sats. All right, so as we can see, as of the recording of this video, we are imminently close, just over a week away from the slated Bitcoin halving. As we can see, it is currently slated for April 19th. Hopefully miners can slow down for purposes of the 420 meme. What a disaster if we're one day off from that, but we'll have to see. For those of you that might be newer to Bitcoin, every 210,000 blocks, the new issuance schedule of Bitcoin is cut in half, meaning we will go from what is currently 6.25 Bitcoin, that is part of the block subsidy or part of the reward that miners get for packaging up the next block and attaching that to the chain, to 3.125 Bitcoin, or on a slightly more aggregate level, instead of 900 new Bitcoin coming into existence every single day, it will only be about 450. And of course, this follows the programmatic issuance schedule that Bitcoin is so known for. That is part of its monetary properties, knowing with certainty what the inflation rate looks like from here on forward until it asymptotically approaches and then reaches zero once we hit 21 million coins. And so historically, this has been a huge deal. This has played an integral role into past cycles. And so before we get into how this next halving might impact Bitcoin and the mining industry, let's talk about how it has changed since the last halving in 2020. It's pretty wild to think back to those times. You had the pandemic that was exploding onto the scene, people locked in their houses. And so at the time of the last halving, one Bitcoin was trading for about 8,700 US cuck dollars. And so price, as of the making of this video, is up about 7 to 8x since then. And hash rate was a mere 120 exahash per second. That's now around 620, 630 or so. So hash rate is up about 5x since that time. You went from, I think, 2 public miners to like at least 25 now, who now account for about a third of the Bitcoin network. And so on the one hand, that's been very positive for growth in hash rate, given funding has become more readily accessible for these publicly traded miners, but it does raise a potential red flag if a bigger and bigger percentage of the network are these sort of regulatorily captured entities. And it also potentially chokes out some of the smaller operators who will have a harder time fundraising themselves, right? Getting access to capital when there are these easier public markets that investors who are interested in allocating capital to the space can go to instead. So definitely a centralizing effect in that regard. We will come back to that later. You also saw arguably one of the most interesting events in Bitcoin's life, which was the China mining ban, which at the time in 2021 had about 50%, maybe a little bit more, of the global hash rate and that basically came offline in very short order. And in an incredible testament to the resiliency of the network, not only did blocks continue to get produced, you saw that hash rate rebound like a V-shaped recovery you have never seen before. And you now have places like Texas that have become a big hub, but you also now have places in Latin America, Middle East, even Africa, that are rapidly growing as well. So on any of those dimensions we just discussed, it is pretty remarkable all that has changed in a mere 4 years. And so let's talk now a little bit about some of the predictions around this current upcoming halving. Okay, so some of the big questions that folks will naturally ask are, well, how might the global hash rate change post-halving? How will the profitability change post-halving, particularly split across different ASIC models? And so I'm going to be pulling a lot of great stats from this piece from Jaron Mellerud, who is the CEO of Hash Labs. And as we can see in this first chart, in the first 3 halvings of Bitcoin, the hash rate dropped 25%, 11%, and 25% respectively. So that is pretty material, right? That's a pretty material drop off. However, this time folks are predicting lower, maybe 5 to 10% drop off. And this is driven by the fact that you have generally higher profitability leading into this coming halving than you did in the last one, given where price is at above an all-time high of the last cycle and near the all-time high of this new one. And when you consider the fact that about 70% of hash rate has come online just since January 2022, it makes a lot more sense as well, because a lot of that capacity that's come online came online during economically challenging times when it comes to Bitcoin price. And we can see that reflected in this comparison for this WhatsMiner model, wherein, the punchline here is that the post-halving economics are pretty comparable to the 2022 bear market bottom. It's also interesting to note that in the past halvings, it only took about 2 months on average for hash rate to fully rebound, which leads us to an important conclusion that these drop-offs in hash rate post-halving really are blips in the grand scheme of things on this longer term trend up and to the right that is global hash rate. But then we can also start to get an understanding. In this case, we're looking at the Bitcoin mining cash cost per Bitcoin. So what is the cash cost of producing 1 Bitcoin post-halving split across different public miners? So it goes all the way from 27,000 in the case of CleanSpark, all the way up to 65,000 in the case of Argo blockchain. And a lot of this is due, of course, to the energy inputs that these different operations are utilizing. Obviously, the efficiency of their current fleets and other factors as well. But the blended average, I suppose, across all of this is about $37,000, $38,000 to produce a Bitcoin post-halving. And again, that is like competitive, publicly traded, miners that are going to obviously have access to pretty competitive energy rates for the most part. And perhaps even more relevantly, particularly for those of you that might be mining yourselves or considering mining, we can see this pre and post halving comparison on profitability split across different ASIC models. And so for those out there that are still running those beat up old S9s, which again can be profitable, it is going to get overwhelmingly difficult to be profitable. And so I suspect we will finally see, other than like hobbyists who don't really care about the fiat profitability of their mining operations and are just either doing it for fun or for, to collect and accumulate a few non-KYC sats, you are going to see S9s shut off for the most part. I even think that's true for S17s here. You can see that as a pretty big jump as well. Although, as price presumably rips later in the cycle, you'll still have support for S17s. You'll still have support for S19J Pros as well. But again, for some operations that have a high concentration of these types of models, they are probably going to be prompted at some point to look to upgrade to things like S21s, etc. But this gives you a really helpful sense of where those break-even points are if you are operating any sort of personal mining operation and or commercial mining operation. At the end of the day, that does matter in the context of being able to pay for electricity bills, etc. We've also seen a couple consolidations, so you'll probably see some continued M&A activity in the industry. And so what are miners doing to adapt? Well, two parts of your profit equation: costs and revenue. And historically, that first one was really it, right? Your revenue kind of is what it is. It's a very simple function of how much hash rate do you have? We know the issuance schedule of Bitcoin. Price of Bitcoin is really the only variable then, in addition to your share of the hash rate. But as we will discuss, the revenue side of things have gotten a lot more interesting since the last halving. But let's start with the cost side of things. As I was mentioning, naturally, a lot of operators are going to look to upgrade the efficiency of some of their fleets. You have Bitdeer looking to partner with TSMC for chip production. You have Bitmain coming out with some of their latest models. I think their latest S21 Pro is only 15 joules per terahash. That is very, very efficient. So that is basically the energy expenditure per unit of hashes you're able to generate. So the lower the number there, the more efficient it is. That is pretty crazy. So you're going to continue to see the normal efficiency improvements with the latest models of ASICs, just as we have in past cycles. I don't think there's anything there, at least that I'm aware of, that is earth-shattering there. And so really, I think a lot of the discussion moves to sources of energy. What are your energy inputs? And so the really big trend, the name of the game, is who can get access to the lowest cost energy. And oftentimes this is a surplus of renewable energy. You see hotspots like Paraguay with all this hydropower, and miners are flocking to that. You have El Salvador, and officially we have the first Bitcoin mining pool now live in El Salvador with lava pool. So that is super cool, geothermal energy mining Bitcoin. We also saw Bhutan announce that it's ramping up its Bitcoin mining capacity to 600 megawatts. They have been mining for quite some time now. And so I think that represents like a 6x increase in their capacity. That is pretty interesting. And again, I think part of the secret there is plentiful hydropower that they're plugging this stuff into. We also saw the big news that none other than Tether has made a $500 million push into Bitcoin mining. They also are focusing on renewable energy sources. It looks like, once again, Paraguay, El Salvador, Uruguay. Tether had also previously announced it was participating in the initiative in El Salvador to do geothermal Bitcoin mining. And so if you can get access to cheap renewable energy, things are looking pretty rosy. And that is evidenced by a couple of those really big investments that we just saw. By the way, if you're like me and you're not Tether with $500 million, you can still get access to some of those incredibly cheap energy rates. I've had Kent, the CEO of Sazmining, on the channel previously, and they are still seeing a cost to produce a Bitcoin of about $24,000 using the hydro that they have access to in Paraguay. So, that's pretty insane, right? You're not going to get that elsewhere. And so if you are interested in that, I will shamelessly put my affiliate link in the description down below if you want to get $50 off your mining rig with them. In any case, one of the really exciting things about these developments is the fact that energy is pretty well distributed across Earth, right? It is not like geographically you have all the renewable energy concentrated in one specific part of the world. It is impressively evenly distributed, in fact. And this bodes very well for at least the geographic diversification and decentralization of Bitcoin mining hash rate over time. I personally think we've probably seen a peak in the US concentration of hash rate, and you're now going to see a ton of growth in LATAM. Yes, in the Middle East as well, in Africa as well. There's a ton of renewable energy there. And I've done a video in the past where I compared proof of work versus proof of stake as a consensus mechanism. And this is also a huge reason why proof of work is so essential. The input into proof of work, i.e. energy, is much more evenly distributed globally than stake, i.e. capital is. Capital is very, very concentrated, the complete opposite. So in any case, I think we're seeing the early innings of that, and I think this will have a very positive effect on the decentralization of Bitcoin mining. Let's move from the cost side of things to the revenue side of things, where things are getting really interesting. Now, you certainly have like the normal diversification of revenue streams, introducing special firmware. Jaron shared an example of his from Hash Labs and some of their operations in Finland, where they're actually selling excess heat. That's pretty interesting. You could have earning fees for helping stabilize an electricity grid, particularly those that are powered by renewables. You could see miners strategically sell energy back to the grid. So there's all sorts of pieces there. But then you're also seeing a lot of transaction accelerator services that have rolled out across a number of mining pools. What this basically is the ability for you to pay the mining pool directly to get a transaction that you want urgently confirmed in the next block that they mine. And or you also have services like Marathon's Slipstream, which are specifically designed for what are called non-standard transactions. Now, standard versus non-standard typically is in relation to the size, the sort of footprint of the transaction. And a lot of these non-standard transactions currently are related to ordinals, right? You had like Runestone minting this 3.97 meg thing, which was like one transaction. That transaction's way, way bigger than what the standard limits allow for. It's way too big to be propagated through the peer-to-peer gossip network of one node passing that information to another, passing it to another, until it shows up in different mempools. And so what's happening in that case is they are submitting that directly to a mining pool such as Marathon through this Slipstream service. And so this poses a really interesting set of dynamics. On the one hand, as we can see in this post, this was looking at a week, so not a whole lot of time. And granted, there could certainly be luck at play here. So it would be interesting to see how this holds up over a longer span of time. But yeah, even if I increase that time, I guess there's this handy little link that you can see some of the insights here on mempool.space. Like, look at this. This is a whole month, not just a week, but a whole month. And Marathon's average block fees are absolutely smashing every other pools. I could even go to 3 months. And I don't even think that Slipstream product has been out that long, but it's made such a difference that even over 3 months, Marathon's average block fees have been so much higher than every other pool's that every other pool is negative on average, and Marathon is the only above average. So again, fascinating, and clearly is benefiting the profitability of, in this case, Marathon. But it opens up a whole set of questions of like, well, if all of this activity is happening out of band, meaning outside the normal peer-to-peer propagation method in which nodes share information with each other, does that not lead to issues with reliability if we no longer have a transparent sense of what's happening in the mempool? If there's all this activity happening outside of it, does this impact the accuracy for pricing for block space? And furthermore, does this lead to additional centralization if some of the bigger mining pools are going to be the only ones that can kind of craft up some of this custom software or run this additional software that allows them to provide these different services? Is that going to put them at a competitive advantage over some of the smaller guys that just don't have either the resources or capital to make some of this happen? And it doesn't stop there either. Marathon has also incubated Anduro, a new layer 2 solution. And with that, they have launched Alice, which is the first such sidechain in this Anduro ecosystem. And it is apparently an Ethereum compatible sidechain, so it's got EVM compatibility, but its security is ultimately tied to Bitcoin's proof of work. And Alice will be used as a tokenization, tokenizing assets for institutions, and make of that what you will. But that gives you a crazy range of some of the new ways that miners are seeking to earn revenue. And in a different point altogether, this was a fascinating post by Mononaut the other day, where he's pointing out that a single custodian, and I believe that's Kobo, now controls the Coinbase addresses of at least 9 pools, representing 47%. And so what that means is that one single custodian effectively controls the Bitcoin mining rewards of 47% of the network. Now, Bitcoin is not proof of stake, but at the same time, that can also potentially open up some interesting dynamics as well. So, interesting stuff. On the one hand, I think we have really encouraging developments with all the renewable stuff, plugging Bitcoin mining into all of these low-cost renewable energy sources that are scattered about the world. We also have a rapidly growing pleb movement on home mining with devices like the BitAxe, etc. The more home mining we get, the more little sites that we get. That is a huge, huge benefit for Bitcoin. So I think there's a lot of positives happening there. But at the same time, you have some of these countercurrents with the rise of these huge publicly traded miners, the custodian issue we just discussed with Kobo. So where this nets out very much remains to be seen. I did a video not too long ago on this very topic around Bitcoin mining centralization, which I would encourage you to check a look at. We are far from having our fates written, but I do think it is important for people to be thinking about this as a really major dynamic as we go forward. And lastly, even those of us that have adopted Bitcoin as a unit of account probably can't help but ask, well, how might the fiat exchange rate respond to the halving? And it is worth noting that Bitcoin's inflation rate basically goes from 1.6% currently to half of that, or 0.8%, which on an absolute percentage basis is really not that big. So in terms of a huge supply shock, I actually personally think the stronger dynamic is what we're seeing with supply that has come off of exchanges over the last several years, really since 2020. That is unprecedented. And so I often like to think of halvings, and especially this one, where again, the absolute difference in the pre and post halving issuance rates really isn't that big. I like to think of the halving as creating the conditions in which a demand catalyst is really going to make price run. And we've seen that with, the introduction of the ETFs. There was news just the other day that Hong Kong could be quite close to greenlighting Bitcoin ETFs. So now you've got the East versus the West. So make no mistake, I think things get absolutely nutty. But I think we could still remain pretty range bound, as I predicted 1 month ago in my last monthly digest. But we'll have to see. But I'm curious to hear, what are your thoughts? What do you think of some of the dynamics we've described with Bitcoin mining? Are you concerned about some of what's happening? Are you excited? Let me know your thoughts in the comments down below. But I hope you found this valuable and insightful. If you did, you already know what to do. Give this video a like. Use the share feature underneath this video. That really does help get this to a wider audience. And if you were so enamored with this content and you want to donate to a pleb, which really does help me continue to make these videos, you can do so in a number of ways. There's the YouTube Super Thanks feature built directly into YouTube. Or if you'd like to donate some sats over Lightning, you can use my Lightning address, me at www.ianmajor.xyz, or ragermajor@getalby.com. Lastly, for the many of you that have asked how you can get in touch with me, you can find me at vita.page/ianmajor. Or alternatively, I think you can do vita.io/ianmajor, and you can message me with deeper questions, or if you want one-on-one mentorship, consulting, some additional hand-holding, whatever it is. I'm now working with a number of clients one-on-one on all sorts of topics, whether it's running a Bitcoin node, whether it's taking self-custody, creating a multi-sig, thinking through Bitcoin inheritance, accepting Bitcoin payments for your business, whatever the topic. Feel free to reach out to me there if you would like to get in touch. I'm still doing my best to be active in the comments on these videos, but as the channel grows, it gets harder and harder to do that. But we'll go ahead and leave things here. As a reminder, every sat counts. And until next time, my friends, I'll see you then.